Hello friends, welcome to another lesson on big players theory. For the ones who have seen my last two videos, they are most welcome on the big players theory's third video. If you have not seen the previous two videos, please check those videos out and then only come to this video, otherwise you won't understand this video. This video is going to go a little bit fast because I have explained everything in detail in the previous two videos. This is just to sum up the concepts. Okay, so let's understand big players theory part 3, and this would be a kind of pure execution where and you can use this theory as your day-to-day strategy to combine with another of a few confluences, if you like. So I personally have another few confluences too, but yes, I do use this strategy too. So first of all, if you all know big players theory, it's very good. Now I'm going to explain you. Okay, so now we are going to understand how to use big players theory and everyday trading. Beginning, what we had understood first is that there are hunts, there are stop loss hunts, the big players hunts, the liquidities, and now we are going to understand the depth of it. So imagine that this is the market going on currently. Now what has happened right now, this is, imagine the daily time frame. I'm writing here 1 day, the daily time frame. You can clearly see a level over here has been hunt, and the most, I got to write this down, the most significant time frames are 1 week and 1 day. Yes, usually I don't use 1 week time frame, but yeah, the most significant are these two. I usually personally use the 1 day only, but I have seen 1 day or 1 week also giving significant good results. You can use it for key levels. For example, if you see, for example, like this on a 1 week, and suddenly you see this has happened, so now you know that this is a very good level. So like that, sometimes you can use the weekly. Now this is the daily time frame. Okay, what will you see on the 4 hour? On the 4 hour, this would look somewhat like this. So now this small move over there is this move over here, and the rest, this is whole bullish trend. Now what you can see over here on the 4 hour is, you first have to analyze the daily. The daily, this level has been hunt. Okay, now mostly I avoid to trade counter trend, but you have to understand that when there are trade setups, then you got to take counter trends. You don't have to take counter trends, you have to take trades based on lower time frame trends. Those two are different story. We are going to see further in the story, or further in the video, sorry. So now we are looking at the 4 hour. You see that our 4 hour is over here, which is this daily spot. This level over there might be somewhere over here, maybe. Okay, so now what do you expect the 4 hour time frame to do? I'll write it over here that this is the 4 hour time frame. What do you expect it to do? See, there can be multiple cases out here. First case is that this is a genuine breakout on the daily time frame. It will bring in volume, and it will just have a small liquidity hunt over here, and boom, it will spike up. The second case is that this is the buyer's liquidity over here, and it will fall down. Whenever you are trading liquidity hunts, always remember, always meet any guru who says you anything. There are always two cases in a liquidity hunt. Where a liquidity is hunt, there are always two cases. You have to understand that whose liquidity is hunt and on what side you are. For that, you need to have multiple other confluences. That is the reason you cannot trade just purely based off only and only liquidity. Okay, now you get my point. Now here you see that the trend is bullish, okay, and the 4-hour trend is bullish. What happens over here is this creates a like this, and this comes below this level. Now you can see the selling first of all is sharp, okay. Now what you do is you move on to more smaller time frames. I personally use the 1-hour time frame. You go on the 1-hour time frame. What you see is I'm directly drawing, this is at the daily level, okay. So the markets were going up and then we had a sharp fall, okay. So this sharp fall is what it looks like, this on the 4-hour time frame. The sharp fall is what it is on the 1-hour time frame, okay. So I'll zoom this out a little bit. Yeah, now what can be the case? First of all, one case is it will come here, it has invited the sellers, boom, trend up, okay. Second case is I have explained all these in another videos, but yeah, I'll just give a recap, a short recap. It can come here, invite the buyers again and then fall, or invite the buyers again, then hit their stop losses and then trend. So these can be the potential cases, but for now we are understanding how to use the strategy. So for now we are looking at this move, okay. So by the time this has happened, the daily which had gone over here must have formed a small doji like structure by retesting over here. Some doji like structure with these wicks above this all would have become a wick on the daily time frame. Now what you do, whenever you see a major liquidity level, you see 4-hour like this, the 1-hour has gone bearish over here, okay. The 4-hour is about to turn bearish. The 4-hour is actually bearish. Now what you have to do is you look at one smaller time frame, which you maybe consider 15 minutes or you take it as 5 minutes, and check the trend over there. If the trend is in your favor, okay, you just mark major levels using higher time frames. For example, in this, for example, I'll show you over here. I'll remove this level, and on the 4-hour you can see that this can be a major level over here, okay. After that, what you can see is that this can be another major level over here. So we got two major levels. Now what it can do is it can just come here, hit the liquidity of this, hit this resistance and then fall. This might be a case, correct? So moving on, if the 15-minute and the 5-minute is bearish, this is just to check the trend. Nothing is we don't have to do anything either. The 1-hour closes below our structure point, you can enter sells. So that is the main concept of the big players theory. And then you need to know, for example, you are seeing signs that see, for example, you have entered somewhere over here, okay. Now you are seeing signs that this is a low level over here, okay, which on the 1-hour time frame is somewhere around here, for example, okay. Now you have entered a trade at this point. For example, the markets have retested, you entered over here and the markets are going. Now here you are seeing what is happening here. It hunts the liquidity, and if it retests and it keeps going, it's very well, you can hold on to it. But if you see something like this happening, that it has broken, okay. Now you see something like this happening, a very big sharp buying move. That time you need to get a little bit alert, because usually when you see sharp moves, usually they are just stop loss hunts. So this may be a stop loss hunt for these buyers, and then it will fall again. But you got to be cautious when you see a slow move like this. Like for example, you see a doji formed over here. For example, I'll draw it over here. You see a doji formed over here, and then the markets are going up. This may be probably that this level has been hunted. Buyers have been invited, and market is going to go up again. So these are the understandings which I have gained from experience. No one can explain you this in so detail the way I have. I can go on to make another 1-hour video on this in detail, but that won't help you. To summarize things and to explain in short is what I believe. Your time is also precious and valuable. So that is the reason this is one concept of big players theory. So this is just a brim of it, means just a conclusion of summing it everything. the major explanation of big players theory is in my previous 2 videos. This is the 3rd video of big players theory. Now after this video, you know how to use it properly. You know how to use it. You will go on the daily time frame, you will check for the level, you will come on the 4-hour time frame, you will check for the level. The major work to be done is on the 1-hour time frame. Yes, and sometimes to bring to your notice that I even use the 1-hour time frame only in itself. The 1-hour time frame is far more the most powerful time frame for me. The 1-hour time frame has been the most powerful time frame for me. Sometimes to mark levels, I also use 1-hour time frame. I have seen that the 1-hour levels are respected a lot. So that is why I use 1-hour levels. And it sums up your trade in intraday also. You don't need to hold for a long amount of days, so the swaps and the other fees are also cut down. That is why I prefer 1 hour, and majorly that the structure of 1 hour is very clean and the levels are respected a lot. I use the high time frames also. I have a view of everything when I take a trade. Even if, for example, take into consideration that this is a 1 hour chart, okay, so I am using this level. At this particular time, I will be knowing that the daily will have some bearish signs. There may be that the previous day must have been somewhat like this, so the daily this 1 hour move will look like a huge daily engulfing candlestick. Yes, or somewhat it may be like a doji. So these are structures that you will understand, and eventually you will know with experience. That is it. That is it for today. So basically I use 1 hour also many a times without any levels drawn on the higher time frames, but you can do accordingly. Okay, the one thing is this time frames also. This is very important to have these trends in your favor, because we are not targeting trades for a long period of time to have the daily and the 4 hour align with our trend. Basically we are targeting these. You can also add the 30 minutes to it. If all these 3 trades are in sync, all these time frames are in sync, then your trade is perfect. So you can go and you can backtest the strategy. I would say that don't backtest that much, or you will not learn a lot. You can forward test. One thing is, if you want to get a view of it, you can join my Telegram there, because there I have shared analysis based off big players theory from a long time, and I usually share my analysis on weekends also, so that people get in-depth knowledge. I don't share proper signals, because that is not what you need. That will not give you knowledge. That will just give you temporary profits, which is of no use, and finally you will blow them all. So that is why I just focus on knowledge, and you will see big paragraphs with explanations written over there. Go through them, go through for the last 2 months, and for the last 2 to 3 months, and see how much progress will you get in the big players theory. Thank you boys, that's it for today. It's Mac on the site.